Welcome back, YouTube. So today we're going to be talking about the breaking of supports. What does that mean ultimately for some of our favorite coins, and what can we expect for the next stop from here? If you've been following my channel, you know that I've been speaking about this for like the past few months, and the fact that this was out there looming, that it was possible that we can have a pretty much a breakdown in the market. We're coming off of the shortest bear market in history, previously to the one that we are projecting right now. And we pretty much have been, skyrocketing for like the last year or so in the market, stock market and crypto market alike. So technically speaking, at some point when you have that type of cash injection, you will have people will take profits, right? They can be from external pressure or inside pressure, but people typically take profit, especially when it's setting records. In my video yesterday, I mentioned that this does not affect technically like the long-term projection of the coin, as long as the coin is quality, has competitive advantages, community, leadership, and utility. Technically speaking, these coins, some of those favorite ones, especially like Bitcoin, Ethereum, and I believe Doge will be one of them as well. They survive bear markets, and they pretty much, after the cycles are over, they resume like nothing ever happened, and they go on to set new all-time highs. But when we look at the market here, we have to look at, okay, what should we be doing in the middle of a bear market, and what are the entry points that we should be focusing on while this is happening? How low will Bitcoin go? This will ultimately decide how low the crypto market will go. As we all know, most of when Bitcoin is going down, technically that is an extraction of institutional money. So they're not just pulling from Bitcoin, they're pulling from all the coins that institutions have money in. So technically speaking, you can kind of drag the market with Bitcoin. And so ultimately, I say that when you have that type of injection, this is almost like a clue as to where the money is going to go when the market turns around. So it's not completely a bad thing that a lot of these coins, or the coins that are used as kind of like the crypto 500 are, which is basically like the top 10, but they're kind of used as an indicator of the overall health of the crypto market. So it's really not that bad. That just means that institutions typically find value of some sort in your coin. The primary reason, before I get into the technicals and the numbers, the primary reason I wanted to make this video is I know that there are a lot of new people in the markets. I know that for the most part, this boom that we have in crypto, or even in the stock market, really, people that have only been investing for the last year or two, they've only experienced a bull market, right? So they don't know what it's like to be like deep red, or what to do, what should you be doing, and the appropriate ways to be doing it in a bear market. What is a consolidation? These are questions you need to be asking yourself now. Am I over leveraged? Can I, if this does turn into something, if the Feds do raise the interest rates and we get a bit of a mass correction in the markets, can I withstand that? Am I able to average down? And do I want more coins as far as in my positions? Am I happy with my current coin count? Like, that's some of the things that everyone should be focusing on right now to get their portfolios in order to ultimately execute. I know it's almost become like cliche when you see the articles of buy the dip and don't buy on the bull runs and stuff like that, which is technically true if you're long term, but there's a right way and a wrong way to do it. Because when you have like a dip, and this is one of the reasons why I made my video on how to do it properly, but when you have a dip and you go all in and you don't account for time, and you don't have like the patience, and you over leverage yourself, you may not be able to withstand the storm, or that temporary period. Because let me tell you what's going to happen to most people in this bear market. And again, this could just be a correction, and we could get a bounce. There's a couple of factors out there. I'm not going to get into them in this video, but I've said them over the past few weeks that could ultimately determine how far we go down and how long we're there. But typically speaking, what's going to happen here is people are going to get really upset. They're probably over leveraged, and they're going to end up selling off their position, saying that, it's a scam, or I can't wait to hold any longer, so I'm just going to cut my losses here. And on average, sometime in the next 6 to 12 months, these coins rally and they take off like a rocket, and they set new all-time highs. And people sit here and they look at the charts or the news or the forums or whatever, and they'll say, wow, I was really in this coin and I had an opportunity. It's like the people that bought Bitcoin at like 15,000 and sold it at 6, and now it's at like 40, and they're like, oh my God, that could have been me. Like the cycle repeats itself. And for the people that are in their investments, and that's really whatever, it doesn't have to be Bitcoin, Doge, Ethereum, whatever it is. Like this sentiment applies across the board. If you have conviction in your investment, play the coin. And if you have conviction in your investment and you're a long term, play the coin, and you have to play your portfolio to your benefit. You know your financial situation. There is no one size fit all. Like you can't get on here and simply say, oh, buy the dip or average down. You may not be able to. You may have a big expense coming up within the next couple of months. You have to account for that. Don't put yourself in a situation where if you know you have something coming up and you're like, oh, what if they're wrong? Or, that's why you need to be able to run the numbers for yourself. But you can go, oh, what if they're wrong? And then the coin loses another 10, 20%. And now you're even further in the hole for this big expense coming up. You have to take into account for that so that you're not putting yourself in a position. This is why I'm always transparent on here, and I'm giving you guys both the positive and the negative, because my portfolio and my numbers, they're not going to change based off of the market. They're not going to change based off of what video I put out. So, and I want you to be in that position as well. So I'm going to feed you both of them so that you can kind of have an idea and make whatever decisions best for you. So outside of the technicals of this video, ask yourself, do I have a plan if we are to go into a bear market? Am I happy with my current coin count? Am I over leveraged? If I am, what am I going to do about it? Am I going to sell some? Am I going to take some profit now? Or am I going to be able to, I don't know, pick up an extra job so that I can get my coin count up? What's my time frame? How long can I stay red? Or is this a long-term play for me? Am I good for the next 2 or 3 years and I'm just going to buy it? Like ask yourself these questions and get these answers worked out, preferably within the next week. Okay, lecture's over. Let's take a look at these technicals. So we have Bitcoin here. If you follow my channel, you'll know that I've been saying on the extreme side of this, if we have the information from the Fed and there's mass fear in the market, institutional money flees the market, I said that we are looking at potentially $20,000 Bitcoin and 6 cents Doge on the extreme side. There's some resistance points in there. We're going to get into those resistance points that are above those thresholds in this video for both Bitcoin and Doge. But those numbers are the numbers. So what happened here is we are typically, the last time I used this chart, I said that we had where we pretty much had a hesitation, which was, it was weak support, but again, support nonetheless, was for Bitcoin was at around 38,211. And I said that, of course, here in this area, we have what we call a gap up, which is massive momentum. And it is great riding up, but it is hell coming down, which is if we break this support, there is none here. And as you can see, when you break this support, it's like a highway to hell. It is, you literally pretty much going to, you have a great opportunity to repeat this fun ride over here, sliding down the opposite direction. What does that mean for Doge? For Bitcoin? What this means that the next level of support is technically all the way at $30,000. So it is very likely that Bitcoin is going to slide another $6,000 down to 30. I will give you, we can look at the bigger picture here because I said that I believe that, I'm just scrolling out so you can see more of the chart, but I believe that Bitcoin has great potential here to come down to this area here, which is right around $30,000, and that will be our next point of resistance. That's if this is definitely going bear market direction, which so far I believe it is. We're putting up horrible numbers, even the stock market today. I believe that we're going to hit this $30,000 level here. And this is even before any news of like the Fed coming out and raising interest rates and the cost of borrow going up. This is before any of that. But 30,000 is going to be here. And again, I believe we have this massive gap up because technically speaking, I believe we're going to break this support as well. And we have the potential to end up somewhere down here around 20K before massive momentum sets in. And we say, okay, well, this is obviously oversold. RSI, you can use RSI for those, but technically speaking, when you have the amount of cash that has been injected over the last 12, 18 months, the money has to go somewhere. Like, so, you know, crypto is great long term, but crypto is going to have these cycles. Staking is just coming around, but technically speaking, these are not cash producing assets. You park them here, they appreciate, you take the money out. Like, so you're not going to get something like a like a Exxon Mobil or Walmart. That's not vastly used yet, where you are, you know, obviously able to get cash for, you know, billions and trillions of dollars that's injected into. So institutions, when times get a little rocky or when interest rates start going up, you're going to see these types of sell-offs. For now, staking, it may change that, we'll see. But as for now, this is the case. And if we take this and we look at Doge, because technically Bitcoin has broken that support here, we're at around 36. We take this and we look at Doge. We did have a flash crash earlier. So we did have a flash crash here back around December 4th, where we went down to around 13 cents. But as of right now, we are at 14.35. We are certainly below that overall threshold. And this is the same chart that I used the other day, a few days ago. And I said that if this support here, if we're to decide for definite to get a breakup or breakdown, it would be around February 7th, February 8th. I believe that at most we will come up and touch this descending line here, this bridge, but ultimately we will stay below it until that point, regardless of what happens, whether we have a sell-off or not in the market. I believe that we're not going to break above this until at the earliest a couple weeks into February, well, the first week of February. So for now, that is remaining true, and we're actually getting that breakdown. So on the extreme side of positive news, for now, I'd say we'd be looking at, yeah, as this comes down, let's see, I'll say February 8th. Yeah, on the extreme side positive, we'd say 1592, just kind of dragging this out, but nothing above this line for sure. So I do believe that for Dogecoin, let me zoom back out here. Looking at those same numbers for Bitcoin, if we were to get the extreme, we would say, okay, ultimately, where is the support for Doge when you have that breakdown, but let's say below 30K or so for Bitcoin? I'm going to change charts here because my charting platform doesn't like to go that far out for some reason. It gives me trouble when I'm trying to go that far out. So I'm going to use coin market cap here. So it's not going to give you any of the fancy lines and stuff, but I know the numbers, so I don't need all of the indicators on here. So because I've done this chart a million times. So where we are now, this is on a 1-year chart. We are breaking the support. We are down here at around 14.4. So for Dogecoin, and you say, okay, what are the historic averages of corrections on markets when you come off of like a really impressive bull run? You'll say, okay, 50 to 80%, extreme side, 90% of all value is lost when that liquidation comes in. So you can expect there historically to be pump on the brakes somewhere at around 12 cents. When you have the opportunity, you can say, okay, well, this is great. This is a great opportunity for retail pressure and stuff like that to come in and be like, oh my God, the coin is overvalued. But that's not always indicative of as far as what's going to happen, because when these types of corrections happen overall, the biggest question people are asking themselves is how long is this going to last? And they may not be solely focused on Dogecoin, because it's not just Dogecoin, or even Bitcoin for that matter. It's not just those coins that are going to be in the correction. It's going to be all across the market. So there's going to be opportunities there everywhere. People will say, oh my God, I can get some Bitcoin. Oh my God, I can get some Ethereum. I can get some Solana. I can get some ADA. You know, so the money typically, you know, it may not necessarily all be focused. So you have to kind of account for that as far as for where the support is going to break in. Now, historically, you can say 12 cents. But as you can see here, based off of the chart, this next actual line, because again, this gap up here is what alarms me greatly, is because there's no support here at all. And you can't, support is not all inclusive. It's support if, you know, if it was that easy, everybody would be trillionaires. But technically speaking, when you have these gap ups, you can expect one down. So that would put us at around 5 to 6 cents. Now, this is on the extreme side. Again, buying pressure, retail or institution, a catalyst, anything like that can literally pump the brakes on this and get the coin trending the other direction. But these are the actual numbers that we need to be focusing on. So when you have these numbers that you are focusing on, you know the numbers. The question is, what are you going to do about it? Are you going to average down? Can you? Or if you're over leveraged, you need to have that honest conversation with yourself. Don't let all these buy the dip ads and average down and stuff like that. That's for people that are in those positions. You're going to have to evaluate yourself and be like, okay, is this plausible for me to average down? I know we have these catalysts coming. I know we have all these amazing things, but am I in the position to put more money into this and wait? And if the answer to that is no, then just stop. It's fine. You're going to do more harm than good over leveraging yourself into a position the same way you would over leverage yourself into a position on a bull run simply because it's going up and you catch the rally right around the top, and then you have to sit the correction out. So this is literally a part of the cycles, but again, assess that for yourself and make that decision so that you are not putting yourself in a position to be over leveraged and sitting in the red here saying that, oh, the coin's dead or the market's rigged, when this happens literally after every bull run. There's going to be a bear cycle. It's guaranteed. Just like after a correction period, we're going to have another bull run. So if you're not in position, just make sure that you're being honest with yourself so that you don't end up screwing yourself. That being said, this is looking like we're heading into a bear market. There are a few things out there that can change that, especially around the end of Q1. But as for right now, I would say brace yourselves for these corrections. Catalysts and everything, again, where the coin goes when the money is fleeing the market, as far as the overall price, it does not affect the longevity of the coin or these prices that it's going to hit, as long as you have those 4 things that I mentioned in the beginning of the video. So just brace yourselves for that and assess your portfolio and yourself to make sure that you are in good standing and you're able to withstand the corrections. I hope you found value in this video. Please give the video a like and subscribe. We are closing in on 40K. So I just want to thank you guys for that. And also just by liking the video, obviously YouTube will see that it's a good video and decide to share it with other people. And don't forget about BlockFi. If you open an account with them, you can get up to $250 in some of your favorite coins, including Bitcoin and Ethereum. And I have that link in my description. I appreciate all of you. Thank you. And until next time.